Financial markets have had their wildest week for years, but for all the drama, the outlook for the global economy and markets looks much like it did 7 days ago. Well, the craziness doesn't stop here. In this next report, we decode where this roller coaster journey goes in the week to come. Take a look.
After the huge swings in sentiment seen over the past couple of weeks, a quieter macro environment is expected in what is a shortened week due to Easter. Reciprocal tariffs have been delayed for 90 days. But there are still substantial price hikes coming the way of American businesses and consumers. Moreover, there are now 3 major headwinds for US households. Tariffs lead to price hikes that squeeze spending power. Increased anxiety about job losses, in part caused by major federal government spending cuts and fears over what it means for entitlements. Stock market falls impact household wealth, making consumers more wary of big-ticket purchases. In markets, US 10-year Treasury yields are up more than 40 basis points. That sort of week-on-week increase hasn't happened since the early 2000s. The dollar is almost 4% weaker against the euro. The S&P 500 is almost 4% higher, with extreme volatility not seen since the financial crisis. What's remarkable though is that for all the volatility, the outlook for US tariffs looks much the same as it did a week ago. One might argue that's a strange thing to say in a week punctuated by a 90-day tariff reprieve. But here's the rub. Before President Trump's inauguration, the average tariff applied to all US imports was 2.5%. The 25% tariffs on metals, autos and certain goods from Canada and Mexico, and the reciprocal tariffs of 10% after the reversal, took that rate up to 28%. If the math is right, we have to go back to the early 20th century to find average US tariff rates this high. Wednesday's reversal saw a range of countries, notably in the EU and much of Southeast Asia, see their tariff rate downgraded to 10%. But China is now facing a rate increase of 145%. Those changes exactly cancel each other out. The average tariff rate today is 28%, just as it was before Wednesday's changes. US firms and consumers have to pay the higher price. The big picture is clear. US inflation is set to rise markedly this year despite this week's surprisingly benign consumer price data, and a growth slowdown is almost a sure thing. While some bets for US recession fell after Trump's U-turn, the broader consensus still remains. From economists to top Wall Street executives, they all argue that the US economy is set to come under increasing pressure. If inflation surges, then the Federal Reserve's hands will be tied to focus on price stability. That is the bigger risk for the US economy. Bureau Report, WION World One.
All right, for more on this, I'm now being joined by Professor Vikas Singh, economist and author, who is joining me live from Delhi. Professor Singh, thank you so much for joining us here on World Business Watch. It's been a roller coaster week to say the least. The week going forward, do you think this roller coaster is going to continue, or do you reckon some kind of stability?
Morning, Shivan. Morning to all your viewers. I think that this is going to continue for the next 90 days. I think 90 days is too short a time to make deals, as Trump calls it, or make agreements with 90 different economies. Also factoring the fact that people have really lost respect for the U.S. leadership with the way Trump has behaved. So getting major economies to agree to his terms or to get into an agreement which will be win-win for both the parties is not going to be easy. So this is going to continue for the next 3-4 months' time. Shivan, my view is.
Understood. Sir, as far as China-US tit-for-tat trade war, I mean, it's safe to call it a trade war now. The relationship is really coming to a collapse. It's not showing any signs of slowing down. I want to get your thoughts on the India perspective here. How do you think this is going to impact India's economy?
I think before we go to India, I just want to talk about my several visits to China has taught me that the Chinese people are extremely proud about who they are. You know, they've been taught as children about how the Western economies and the Western society has humiliated them. As adults, they've realized that they have got the wrong end of the stick. So they're fiercely competitive. They are fiercely proud about their culture. They're not going to take this lying down. So if the Trump administration feels that by bullying them, they're going to get this win, I think they're extremely wrong. Now, coming to India, I think India is, I mean, in this turmoil, India is probably a safe haven. Our economy is not as integrated as China is, or the other economies to the US. We export only 20% to China, to the US, not too much. Our domestic economy is strong. 70% or 65% of India's economy is domestic led. So we are in some way in safe haven. This doesn't mean that the policymakers don't need to work on it. I think this is a wake-up call for the Indian policymakers. We need to now realize that the world is going to change. It's going to change more frequently than it has ever done, and we need to be prepared. There are several things that the policymakers need to do, but that's in the future. At the present, I think I would hope that the finance minister or some senior leader talks about this to the public to soothe the nerves, because I think the small investors are hurt. That's not all. The small investors also worried about what's going to happen. So somebody at the senior level,
understood.
Yeah,
small investors are definitely.
Especially,
yeah, it's been a bad roller coaster ride, I would say, for the small investors. But India, as you mentioned, continues to be a safe haven, at least, but they need to be prepared as well. I also wanted to get your thoughts on this. The way these decisions are coming out from the US. There is a threat, then there is a reprieve. Then there is a threat, then there is a reprieve. There is again a stance which is taken, then it is changed. Seeming extremely unpredictable. Do you think there's going to be an easing in the tariff attitude from the US president after the latest concessions on consumer electronic goods, including on Chinese imports?
I think the Trump administration has probably realized that this is not going to be something that they're going to win very easily or very quickly. He's also realized that bullying can work with smaller economies; it can't work with larger economies. He must have also realized that the U.S. economy is really coupled with the Chinese economy. It's coupled with the global economy. The world has become integrated. There's too much of interdependence between these two economies, and that's not easy to demolish with just a phrase or just a stroke of a pen or an executive order. If he wanted to really do something, I think what he wanted to do is right. The method that he's applied is wrong. This is not the way to do it. I would assume, and I would hope, that in the next 15-20 days there won't be too much noise from the White House, and I'm using the word noise purposely, because that's what we've been hearing. I hope the U.S. administration starts in earnest to talk to the other economies to get the trade agreements in place. It's not going to be easy, but even difficult job has to be started. So I think the next 3 months we will wait and watch.
Understood.
In the meanwhile, his goal of bringing manufacturing back to the U.S., I think it's a non-starter. Because the U.S. economy is not ready for manufacturing shirts, manufacturing leatherware, or manufacturing even cars.
I hear your point.
Many people may not.
I hear your point. No, but thank you so much for joining in, sir. That was Professor Vikas Singh, economist and author, joining me from Hyderabad. Pleasure speaking with you and getting your thoughts on what to expect in the next week and, of course, the 90 days going forward from here.
Thank you so much, Shivan. My pleasure.